Hello and welcome to this episode of Your Financial Planet, a podcast hosted by the Synergy Capital Solutions team. Join us while we share our journey as we navigate life's complexities and provide solutions to reduce the noise around your personal financial situation.
Hi, Karen. How are you today?
I'm good. How are you, Alex?
I'm doing great. Thank you. And thanks for joining me. I know we've been talking to a lot of clients lately about leaving a legacy and estate planning in general, and some changes are coming up. But what are these changes, and how do you think clients should prepare for these?
Yeah, so let's start first with what's happening and kind of the background of it. So in 2017, there was a Tax Cuts and Job Act that nearly doubled the estate and gift tax exemption from previous levels. So what that really meant is for, let's say, 2024, the exemption is 13.61 million for an individual, 27.22 for a married couple, which means that until you hit that level, you're not paying the estate tax, which is about 40%. The act is actually due to sunset, meaning expire by the end of 2025. So if nothing changes, we would go back to 2017 levels. So that would drop from that 13.61 million exemption for an individual to about 7.5 million once you add in inflation.
So basically, what you can leave to your heirs is cutting in about half. How does this translate to our clients?
Yeah, good question. So you're right. Right now, you can transfer up to that 13.61 million, 27.22 for couples to your heirs without paying that gift or estate tax. But yeah, if it does lower, anything above that number would be taxed at 40%, meaning you're leaving a lot less to your heirs, the legacy that you want to leave to everyone. If no changes are made, that would hit on January 1st, 2026. So it is a huge difference when you're talking about perhaps your income state or tax levels versus what that 40% could bring.
Yeah, it's incredible. What a huge difference it'll make in everyone's legacies. Any suggestions on what our clients should do other than working with an estate attorney?
Yeah, I would say definitely have a plan. I mean, you know me, and our team always goes back to what's your plan? Do you have one? If not, now's the time. Make sure you do have one. If you do have a plan, review it, look at the numbers, see if it is something that's going to affect you, or maybe it won't. And if you do not use the exemption as it stands now, it may be lost. So right now, it's not going to revert back. So if you use the exemption up to that 27 million, if you're married, and then in 2026, it drops, it's not going to hit you with that tax. So it's basically like a use it now, or you could lose it when it does sunset. So we do really recommend that. Also, if you're planning to pass assets onto your heirs or charity, now's the time to really make sure that it's set up appropriately so you could use that next year to do so if it makes sense. But Alex, can you help our clients understand what that means, and specifically like the use it or lose it, passing on to your heirs or charity, kind of examples of things that they can do?
Yeah. So we work hand in hand with estate attorneys, and we see this thing every day. We kind of implement clients' estate plans, and really from our perspective, there's kind of three main things you can do. One thing that's pretty easy is take advantage of the annual gift tax exclusion. So this is increased every year to keep pace with inflation. For 2024, it's 18,000 per person. So spouse and spouse could each give 18K to each kid and their spouse. So you can kind of compound it between individuals. So you can give 18K to any person, your neighbor, if you want to. This helps to reduce your estate value. Another one is to leave funds for charity. So if you're charitably inclined, and everything's different depending on, like you said, people's plans. So not saying give the additional $7.5 million to charity right now and it solves all your problems, because that probably is not going to work out for you in the short term. But if you are charitably inclined, there's no limit on charitable deductions, and you can fulfill your philanthropic goals, minimize your estate taxes by developing a plan to give the amount above what you can be sheltered from the estate tax, so that above the 7.5 million in the future to charity. So you could look to front load some of that, work with us, and again, estate attorneys and your CPA there's different ways to do that in more tax advantage manners. Like we have another podcast about doing it from your IRA or a donor advised fund instead of just writing checks. But then
Yeah, I was gonna say, Alex, something to point out with that too is you don't necessarily have to give directly to a charity today. Like you were talking about front loading a donor advised fund. So if you don't know where you might want it to go, it's still okay, get it out of my estate today and then figure out where it goes tomorrow.
Yeah, so that's similar but different to kind of the third thing is people can set up an endowment or a donor advised fund where it kind of earmarks stuff for charity in the future, takes it out of your estate, but it doesn't have to, you don't have to write a check specifically to like one individual charity, because at that point, you know, the money's gone. You don't really have a say over where it goes outside of that charity. But then this gets a little bit more complicated, but another option is to set up a trust. Again, with an estate attorney, we help kind of, an estate attorney sets up the entities for the trust or a lot of these strategies, and we're the ones that kind of put them in place. So we fund the trust, so to speak. But you could set up a credit sheltered trust or a bypass or family trust or a generation skipping trust where one spouse passes, a portion of their assets go into trust, passes to the beneficiaries on the second spouse's death. So it kind of, instead of going from, for instance, like me to my wife, it skips her and goes to the next generation. So say I have 7.5 million, I don't, and my wife has 7.5 million, she doesn't. But collectively, for this example, I
You have
pass my money.
1,500.
Yeah, right. Not a bad problem to have.
Yeah.
But say I pass my money to her after I pass away, and it gets us above that threshold where she can disclaim it, or I can put into a trust where it skips my wife and goes to our children, which we also don't have right now, but for the sake of example. So then a smaller pool of assets would go to the next generation on the second spouse's passing. And then another option, so there's what's called like an irrevocable trust. Again, work with an estate attorney to set these things up, but an irrevocable trust is kind of in line with the first one, where you are allowed to gift that $18,000 per person every year. You could gift money into an irrevocable trust, or you can put, call it portion of your company, any really kind of number of things. You could put a property into an irrevocable trust, but you give up control of the assets right now, pay the gift tax currently, and then the contribution to the trust is no longer part of your estate. One example of this would be like a spousal lifetime access trust where your spouse would get the income. So you put a bunch of money in there or a bunch of equity, like call it part of your taxable portfolio in there. Your spouse would continue to get the income off of that through the remainder of their life, but it's out of your estate and out of their estate because it's in like an irrevocable trust, so to speak, which is like it's entirely owned entity.
I say, so it takes it out of your state and you kind of give up the control of those assets.
Exactly. Yeah.
Great. Great. I would say so, but what I'm kind of getting from you is talk to an estate attorney. That everyone's situation and why everyone has specific plans is that everyone's situation is a little bit different. And your goals, your dreams, the assets that you have, how they're titled now. So am I right in the takeaway? Kind of the big one is we have these thoughts, insights, but like at the end, go to the state attorney for direction.
Yeah. Yeah. Like I said, we work with the state attorneys every day. We work with accountants every day, but you kind of need to work with your professionals to make sure you have all the pieces in one place. I think one important thing to note is there's no way of setting this up after something happens to you. So like you pass away tomorrow and you were going to set it up on, next week, it's too late. It's important to have it in place now because it dictates how things happen when you're gone and you don't have a say in things. But
Yeah, and yeah, if we don't do it and have anything set up, it's kind of up to the state what happens. And
yeah,
what if the state doesn't have the same opinion as us?
yeah, exactly. Which is takes a while and is expensive.
Exactly. Yeah. Unfortunately, we've had to deal with it, and we'd rather the client get exactly what they want than the state.
Yeah, it's hard.
Sure.
You know, you're going through the turmoil of a spouse passing away, and you're on top of that, you're unable to access your checking account or and list any number of issues that you might kind of run into if you don't have access to your money on a day-to-day basis.
For sure. So kind of in summary, there are 3 things that we can do now. We can use our gift tax exclusion, start thinking of charitable giving and give funds to charity, make sure we have that all kind of set up the right way. And then a state attorney, figure out the trust and make sure everything is correctly kind of laid out. That sound good?
Yeah, I like it.
Great. So I will say my main takeaway is have that plan and then make sure that whether it's our legacy, charitable giving, even our investment policy, make sure we kind of have that plan and keep reviewing it, especially with kind of changes going on with the tax laws, estate laws, anything kind of that are constantly changing, election years, things that may impact kind of what we're trying to set up in the end.
Yeah, absolutely have a plan.
Sounds good, Alex. Thank you.
Yeah, talk to you soon. Thank you.
Bye-bye.
Thank you for listening to Your Financial Planet. Please press the like button below if you enjoyed this episode and hit the subscribe button so you can stay up to date on all our future episodes. The team at Synergy Capital Solutions is always here for you. Reach out to us via email at hello@synergycapitalsolutions.com, or you can call us at 888-363-4546 or check out our website www.synergycapitalsolutions.com.